The mid-cap index is now down over 2%. The advanced decline ratio is at 1:7 in favor of the decline.
Now we're down close to about 400 points. So there has been a 100-point recovery in the Nifty at the current levels of 15,840.
Well, the market right now is showing some bit of fight at around that 15,750, 15,800 sort of level.
There were very few winners today. Close to around 500 stocks gained, while close to around 2,300 stocks were on the losing end. The Nifty goes home with a cut of around 2.2%.
Hello and welcome to Markets Today, the show where we track the 6 hours of today's trading action through 5 headlines, 5 stories. I'm Prashant Nair. With me, my colleague Mangalam Malu. Here are the headlines that we are tracking for the day today. Over 5 lakh crores in investor wealth is wiped out as the BSE ends deeply in the red for the 4th session running. Nifty Bank drops over 4% in a single day for the second time in a week. Sensex and Nifty are now down over 15% from the record highs they hit earlier in October last year.
Crude oil, that continues to boil. Prices hit a near 14-year high as the United States weighs a potential ban on oil and gas from Russia. Meanwhile, ONGC, GAIL and Oil India see healthy gains on CLSA outlook for the sector, and of course the commodities rising themselves.
It's not just crude oil, but prices of coal, heating oil, aluminum, copper and many more have hit record highs. Metal stocks shine through with Hindalco leading from the front in what was essentially a very weak market.
The rupee hit a record low against the dollar as it neared the 77 mark, breached that briefly as well. Bond yields also hardened by over 1% as crude oil prices spark fears over current account deficit.
Auto stocks tumbled with the index losing 4%, soaring crude oil prices and an extended shortage of semiconductors due to the Ukraine war deal, a double blow for the sector. Okay, Mangalam, I mean, deeply in the red, and no real shades of red. It's just deep red in terms of trade. I think the fear is very simple now. It's the fact that commodities are surging. I mean, unless you've been, of course, hiding under a rock, you know that the prices of oil have gone through the roof. You've got, industrial metal prices which are through the roof. Even agricultural commodities like wheat, etc., are going up. What does this lead to? It leads to high inflation. At the same time, it leads to a potential hit to growth. What is higher inflation and growth which starts to look weakish? You know, we start to talk about the S word, stagflation. I mean, you know, risks or even fears around that is being at least starting to be spoken about in the market out there. And I think that is absolutely no good for equity markets per se. It's also essentially a trigger-heavy week. We've got the UP election results. So exit polls come out today. And then, of course, the actual results come out on the 10th. We also have increase in fuel prices at the pump, which will take effect. The reason it is important is not just for the oil and gas complex, but also for the fact that, this will have a wider ramification on consumption per se. If, for example, the government does not cut excise duty and tries to pass on the entire hit to the end consumer, I mean, at least the consumption part of the market is not going to be happy at all. Investors are not going to be all that happy because this will come at a time when growth in those segments is looking vulnerable per se. But I mean, all in all, a pretty deeply down day that we had. Except metals, Mangalam, was there anything else which did well or everything down?
Metals and oil players, basically, that did extremely well, Prashant. But, I was just thinking of listing down in my head the kind of uncertainties that we have to navigate. There is the Russia-Ukraine crisis, there are oil prices, there are other commodity prices, we have UP election results, and at the same time, we haven't even spoken about the Fed yet. That is next week, the Fed meet. So those are the uncertainties that we have to, navigate through. But it's the first day of the week, and on day one of the week, when the bears come out on top in this manner, it's like, being on the other side of the pitch and the batsman has gone ahead and hit you for a 6 on the first ball of the over itself. So you're on the back foot for the remainder of the over. Let's talk about what was on the back foot. We start with the banks. The Nifty bank has now essentially entered bear territory by correcting 21% from all-time highs. And we had IndusInd Bank down 7.5%, Axis Bank, and Axis Bank, again, these are not dinky toy stocks that we're talking about. ICICI Bank down 5%. HDFC Bank was a relative outperformer in the sense that it fell just about 3% odd. Apart from banks, we had the consumption stocks as well. Inflation moving away from, widening its grip into agri commodities. HUL was lower. Asian Paints. Britannia was down almost 7% in today's trading session. Alongside that, we had Godrej Consumer also going very close to the pre-Sudhir Sitapati sort of levels on that counter as well. And why just that? We have the auto stocks. All of them were among the top losers on all the indices today. The auto index was among the top losers. Maruti Suzuki down 7%, Eicher Motors down 3.5%, cuts seen on Bajaj Auto as well as Hero MotoCorp too. But let's talk about a few stocks that gained. There were few and far in between. We had, the kinds of ONGC up almost 12% odd. We had all other stocks, the kinds of Hindalco up 6% odd, and related commodity plays did extremely well. Mid caps as well didn't do too well. We had nearly 5 stocks declining for one advancing.
I mean, market breadth, of course, looking terrible. We have Jay Bala of cashthechaos.com who's now joining us to give us a technical overview of things from here. I mean, all we can do, I guess, is at least on a day-to-day basis, take stock of levels and what the market health is looking like. Jay, thanks very much. Good to have you here. Quick thoughts, Jay. I mean, you were sounding bearish last you were on the show, which was, I think, about a week and a half back. What are your thoughts now after the big drubbing we've seen today?
Thanks for having me on the show, Prashant. I've been warning this kind of scary down move for the market since November. And I've been saying that we're going to see 2022 to be a sharp bull market correction. That was a theme I've been working with since October, November last year. And, that's playing out as per expectation. And I think as far as Nifty goes, I think we are going to see at least one lower low on the short-term time frame. And after a foxy big bounce in the higher time frame, we're going to see a bigger decline that's going to stretch into the next quarter, calendar quarter, probably into July, August. So, we have 2 lower lows coming, one in the shorter time frame and one in the higher time frame.
All right. So what are those lows that we're looking at? And at any point, can we talk about any sort of support and bounce back, Jay?
Okay, let's talk about levels in that case. So basically, there is a tricky thing that people don't note. Whether it's a freak trade on the SGX Nifty, whether it's on the higher side or on the lower side, the market tends to get there. We had a freak trade on the SGX Nifty about 15,500 last week, and the market is getting there. The support for the Nifty is about 15,400. That's the nearest support. And then, the resistance is going to be about 16,400 to 16,800. That's going to be difficult for the market to cross from here. As far as the banking index goes, I spoke about 2 lower lows, one at the short term and the one at higher time frame. The markets will get to eventually about 27K on the banking index. So, that's what we are working with. That's a working model for the market for going into the next quarter.
Sorry, Nifty, what was immediately, what are you looking at? What level?